Our deep dive in today's episode is in the UK as the Apex Bank Monetary Policy Committee decides on parameters. The Bank of England is expected to cut interest rates later today by 25 basis points from 4.75% to 4.5%. Hello, this is Bode or Shosami on Global Business Insight, where we bring ideas and discussions on the main business headlines. But first, to some of the business stories today. European markets traded higher yesterday as earnings beats drove stock gains. In the US, as investors look beyond trade war threats, the Dow Jones Industrial Average was up 300 points, helped by improved sentiment following better than expected private sector jobs data. Indeed, the ADP, that's the National Employment Report for the private sector, yesterday showed US January payrolls grew by 183,000 jobs. That was last month, after an upwardly revised 176,000 rise in December, also more than expected. The more closely watched non-farm payrolls, that's the public sector data, is out tomorrow. Still in the US, the economic activity in the US services sector continued to expand in January, but at a softer pace than in December. We saw the ISM services PMI down to 52.8 from 54. Meanwhile, China has launched a formal dispute at the World Trade Organization over tariffs imposed by the US President Donald Trump on Chinese goods. This came after China announced their own retaliatory tariffs and countermeasures against US brands. Google yesterday released to everyone Gemini 2.0, said to be its most capable artificial intelligence model suite yet. Last December, access to Gemini 2.0 was given to developers and trusted testers, as well as wrapping some of its features into Google products. Google also said it is reviewing some of its diversity, equity, and inclusion initiatives, joining US businesses scaling back on diversity initiatives. Apple stock fell after a report said that China is looking into probing the iPhone maker's Apple Store fees and practices. Apple shares closed down 0.14% at market close. Investors are not buying the magic as Walt Disney shares closed down 2.44% despite reporting in the December quarter net income of $2.55 billion or $1.4 per share on revenue of $24.69 billion, topping expectations on both top and bottom line. Markets are focusing on expected drop in Disney Plus subscribers after a price hike and lower domestic theme park profits due to hurricane disruptions and high cost of launching its latest cruise ship. Ride-hailing giant Uber shares sank 7.5% at close yesterday as it reported less than expected fourth quarter earnings and operating income, citing legal and regulatory expenses. A strong dollar is also hurting bookings in the current quarter. And in Nigeria, President Bola Tinubu has increased the proposed budget size for 2025 presented at the joint session of the National Assembly in December from 49.7 trillion naira to 54.2 trillion naira. The increase came from 1.4 trillion naira additional revenues made by the Federal Inland Revenue Service, 1.2 trillion naira made by the Nigerian Customs Service, and the 1.8 trillion naira generated by other government-owned agencies. The President of the Senate consequently directed the request to the Senate Committee on Appropriations for urgent consideration. The main challenges with Nigerian budget include unaffordable high-debt service requiring rethinking on how government finances its agenda. In addition, on a per capita basis, core government roles like, say, law enforcement, police, courts remain underfunded. Overreliance on public sector funding from debt to finance the government is an issue. There's a lot of inefficiency, less productive, and in some cases, bloated regulatory agencies, and corruption remains still an issue in many of these agencies. The high government debt also crowds out access to urgently needed financing for the private sector. Tuesday in the UK, the Office for Budget Responsibility (OBR) presented the Chancellor with its first assessment of the economy ahead of the spring statement. That's on March 26th. Critics say Ms. Reeves will need emergency measures to balance the books. The OBR growth forecast is also expected to have been cut, and fiscal room is now much tighter. On today's BOE, that's Bank of England rate decision, what are the issues? Looking at the latest UK inflation data in December, we got an unexpected drop by 2.5% in the year to December, down from 2.6% the month before. That was after 2 months of rises as hotel prices and tobacco costs eased. Services inflation, closely watched by the BOE as a gauge of underlying price pressures, has also slowed to 4.4% in December from 5% previously, though still rather high. The last autumn budget statement, which saw higher employer national insurance contributions plus increase in the national minimum wage, may have led to wage pressures and further depressed business confidence, also giving the Bank of England concerns that high costs will be passed on to consumers, which will weigh on the economy. The UK economy barely grew by 0.1% month-on-month in November 2024, following a 0.1% contraction in both October and September. Looking at 3 months to November, the GDP showed no growth compared to the previous period. Also, on the UK economy, the final January UK PMI data were revised lower, though both services and composite activity still in tepid expansion. A weak retail sales data print also added to the latest in a run of data pushing the case for a rate cut. Sales volumes fell 0.3% month-on-month in December versus the 0.4% increase forecasted. The stage seems to be set to get a rate cut, which will be the third reduction in borrowing costs since the peak of 5.25% in August 2023. Also to be watched today will be the vote split among the 9 members of the Monetary Policy Committee. A near unanimous decision implies a bias towards easing. Updates on growth and inflation projections will also be very instructive to tell us more about what the next steps will likely be. The Apex Bank will, of course, also note that UK borrowing costs spiked up in January amid a global bond market sell-off, and that will stoke more concerns, even as the deficit and weak growth forecasts are already issues. This already would have, again, a tightening effect. However, UK government debt yields fell by about 10 basis points ahead of the Bank of England's interest rate decision. But there are 2 other main issues that are of interest. First is the BOE assessment of any potential inflationary impact from the fiscal reforms announced by the government in October. A recent survey suggests that firms are planning price increases as a result of these higher costs. The second question is on Trump's volatile trade policy and what that could mean. Analysts do not see these issues as enough to derail a rate cut, but it could lead to hawkish signals from the MPC looking forward. A rate cut today is good news for the approximately 600,000 homeowners who have mortgages that track the bank's base rate. It, however, also results in lower returns on savings accounts. The US Postal Service said yesterday that it would accept parcels from China and Hong Kong again after a temporary suspension following President Donald Trump scrapping a trade provision used by retailers to ship low-value packages duty-free to the United States. Though UPS did not explain the reason for this, analysts see the tension ratcheting up ahead of negotiations between Trump and Xi Jinping after tariffs and countermeasures were fired in a trade war between the two largest global economies. FedEx also said it had suspended its money-back guarantee for U.S. inbound shipments effective January 29, citing recent regulatory changes, more trade barriers mounting. New tariffs ended duty-free shipments of goods under $800 from China to the U.S. The so-called de minimis provision was initially designed to streamline trade. Its use has surged with the increase in online shopping, resulting in 1.36 billion shipments entering the U.S. in 2024, up 36% from 2023. The Customs and Border Protection are working with the shipping companies and the courier companies on an efficient collection mechanism for the new China tariffs to ensure minimal disruptions. In South Africa, banks defended their lending practices against allegations of limiting access to credit for black South Africans and biased account closures. At the launch of the Banking Association South Africa's Transformation Report for 2024 yesterday, MD Bongiwe Kunene presented more details on compliance with legal standards regarding account closures. South Africa MPs, however, argued that the transformation figures presented by Kunene did not exactly match the experience of black banking clients facing discrimination, differential interest rates based on race in a sector still dominated by white executives. How do you eliminate bias in a multi-race, multi-ethnic society without reducing risk standards? Should risk committees, for example, review their standards or find ways to reflect the societal or ethnic and religious mix in their committees to avoid bias? My short take is that attempting to force patterns through quotas and introduce special provisions to cater for race will ultimately dilute standards. However, recruiting and executive selection should definitely widen the net in their search for qualified candidates who must always meet the high minimum standards that is required. Additional post-transaction reviews and in-house audits should also be rigorous to spot and correct biases where they seem to have occurred in contravention of bank ethical policies of zero tolerance for bias in credit management and indeed all service delivery practices. Still in South Africa, the office of President Cyril Ramaphosa has clarified that there was a call between the president and Elon Musk, who was said to have accused the nation of anti-white racism. The call sought to clarify any misinformation and misunderstanding, and Ramaphosa has been explaining that the controversial Land Expropriation Act was subject to a long process with the expectation of compensations that will be awarded subject to adjudication by the courts. All this still ongoing. Trump earlier announced suspension of more than $400 million in aid funding to the country. Also, in South Africa, the private sector started 2025 on a weak footing as business conditions deteriorated sharply in January. The S&P Global Purchasing Managers Index fell to 47.4, down from 49.9 in December, also its lowest level since July 2021. Asia Pacific markets traded mostly higher, apparently shrugging off what was a week of trade turmoil and mixed U.S. technology sector earnings. Also in India, the central bank is expected to cut benchmark interest rates in its ongoing policy meeting, which will be concluded tomorrow. Foreign investors in January appear to be exiting Asian stocks as they reposition their portfolio, concerned that regional exports could suffer under new Trump tariffs. Well, that's it on this episode of Global Business Insight. You can watch us on Business Day TV YouTube channel Monday to Friday at 11 a.m. West Africa time. Thanks for watching. This is Bode Oshosami. Bye-bye.